Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to talk about a proposed statement by the FASB that will update the conceptual framework. Both FASB and GASB have been actively working on their conceptual framework, and this one is related to the elements of a financial statement. You would know an element as an asset or liability. And so you're probably thinking, why on earth are they working on what are the elements? We kind of know those. We've learned them when we were in Accounting 101, right? Intro to accounting. We learned about what those elements are. Well, they're going to give all of those definitions a little bit of an uplift. So when we look at this, chapter 4 of the elements of the financial statements, it was issued July 16th, 2020. Comments are due November 13th of 2020. Now remember, concept statements are not authoritative. If we have an existing standard, it doesn't override that. So sometimes you might hear something and you're like, well, that's in conflict with XYZ standard. That's okay. This is for the board to be able to consider when they're writing a standard. So that's really what the conceptual framework is for. It's for consistency between boards, right? So it's the concepts that underlie financial reporting and to have a series of them that they can use when they're establishing and writing standards. But it doesn't replace the actual standards that have been issued. And we like to think of elements of financial statements as the building blocks, right? So when we teach freshman accounting, I have had the luxury of teaching freshman accounting in the past. It's probably one of my favorite things to do, introduce people to the world and language of accounting. And when we teach that, we start off with the basics, right? So what is an asset? How is that different from equity, et cetera? And when we look at these elements, they're the big broad classes. So assets, liabilities, revenues, expenses, right? Those are the things. And why are we updating them, right? So the board has concluded that some of the elements that are in extant standard concept statement 6 could be either developed further or improved to provide a better foundation for future standards, right? So there have been changes in practice that have been made since the first standard was written here, as well as is their experience with trying to use the conceptual framework during standard setting and some of the flaws that it has. Now, this was not a unanimous vote. Christine Bodison, notably, is the one who gives the dissent, and that's very interesting because Christine is an academic. She spent most of her career teaching accounting, and so I always love to read her dissents because they're really interesting, and so some of them I actually really agree with for her. So this concept of control, which they've been really focused on in the most recent standards, if you look at leases and et cetera, this concept of control was added for or explicit for assets and now has been kind of taken out and assumed. And so she has dissented due to that. So really interesting theoretical discussion here. You're not going to get a lot of practical items here. You're going to get a lot of theory. So the goals of the update were to clarify and clearly identify the rights or obligations that give rise to an asset or liability. So they wanted to make this a little bit more clear as to what makes a liability versus an asset. And you're going to see some changes in those definitions. Eliminating terminology that makes the definitions of assets and liabilities difficult to understand. So, you're going to see some terminology that I've been teaching for years and been using as a definition of an asset and liability, and they're going to be taken out of that definition. Clarifying the distinction between liabilities and equity. Most recently, they just issued ASU 2020-06, and that ASU actually furthers this concept and what that distinction is, as well as difference between revenues and gains and expenses and losses. So when we teach those, we call them the regal revenues, expenses, gains, and losses. And then modifying the distinction in equity for not-for-profit entities. So when we talk about this concept of net assets, one, we have to address 2016-14, which changed the number of buckets, and two, trying to make it a little bit clearer about what that equity classification means. Some things were just kept the same, rolled forward from prior, no material changes. So we know that assets and liabilities are the conceptual and definitional primacy, right? So if you think about it, the balance sheet is where we get our foundation. The income statement is just the change in the balance sheet. And so they talk a lot about how these definitions have to be in terms of the order or hierarchy of them. So assets and liabilities, right? Those definitions are going to be the primary, and then changes in those elements give rise to the definitions for the other elements. And so start always with those. So let's take a look at the new definition of an asset. An asset has the following two essential characteristics. It is a present right, and the right is to an economic benefit. The combination of these two characteristics allow an entity to obtain the economic benefit and control others' access to the benefit. So when we look at this, the prior standard used the term probable and then future economic benefit and focused on past transactions or events. And so you can see here, none of those terminologies are in there. They remove the term control from the explicit definition here. It's more of an implied element now. And they kind of just focus on the basics, right? So we don't have to worry about future economic benefit, which was sort of the underpinning of the definition in the past. So it's a present right, and the right is to an economic benefit. And so this concept of probable being removed, past transaction being removed. And, remember, assets can have a lot of different features about them. They can be tangible, they could be intangible, they can be exchangeable, they can be separable, right? Those are not going to be part of the essential definition. When we're talking about an economic benefit, an asset has the capacity to be beneficial to an entity by being exchanged for something else or something else of value, by being used to produce something, or by being used to settle the entity's liabilities, right? So those are the concept of an economic benefit. Things that give an entity no advantage beyond the common advantages of others because they are available to all do not qualify as assets. So again, there's no unique economic benefit. Christine actually has a dissent in this area. In terms of the present right, a right entitles its holder to have or obtain something or to act in a certain manner. Obviously, there are various types of rights. Legally enforceable rights to economic benefits can be obtained without legal ownership, right? So you can have a right like a lease. You don't have legal ownership, but you have the right to use the asset, right? The right to control the use of the asset. Same thing with IP. So it's not a legal ownership concept. It's a right to obtain something from it. All right, moving over to the definition of a liability. A liability is a present obligation of an entity to transfer an economic benefit. So again, it has two essential characteristics. It is a present obligation consistent with the asset definition. However, the obligation requires an entity to transfer or otherwise provide economic benefits to others. So again, eliminates a lot of those same terms we talked about from an asset, right? So assets and liabilities had some overlap there. You'll see those terms were removed here. It clarifies when we become presently obligated, which we're going to talk about next. And it fundamentally expands the entire population of what could be a liability to include items that are settled with the entity's own shares rather than exclusively with assets. So it does not require that an asset be exchanged to be a liability. So present obligation, a liability requires the entity be obligated to perform or act in a certain manner. Most liabilities are legally enforceable, including binding arrangements, agreements, rules, statutes, or other requirements that would be upheld by a judicial system or government. So that's that concept of a present obligation. Also addressing equity or net assets here, you have equity or net assets. Net assets is the residual interest in the assets of an entity that remain after deducting its liabilities. So one of the things that it does do here is for net asset classes, it recognizes 2 net asset classes instead of 3. We used to have, prior to ASU 2016-14, 3 net asset classes. In a business entity, equity is the ownership interest, but that's not necessarily true for nonprofits, right? Net assets of a nonprofit is not typically an ownership interest. So they kind of spend a little bit of time clarifying how equity versus net assets work. Then we have our next 2, which are still deemed to be part of the major overall concepts here, which is investments by and distributions to owners. So investments by owners are increases in equity of an entity resulting from transfers to the entity from other entities of something valuable to obtain or increase ownership interest or equity in the entity. And a distribution to owner are decreases in equity of an entity resulting from transferring assets, rendering services, or incurring liabilities by the entity to owners. And so distributions decrease our ownership interest. So not a ton of change here, but again, there's a lot. This is a very long standard. I've only pulled some of the key definitions. There was no change to the definition of comprehensive income. This is the same one as in Extant Concept Statement 6. Comprehensive income is a change in equity of a business during a business entity during a period from transactions and other events and circumstances from non-owner sources. So again, if we have a distribution or if we have an inflow that is deemed to be a contribution of equity, those are not included in comprehensive income, right? They don't run through the income statement. They start with the balance sheet. It includes all changes in equity during a period except those resulting from investments by owners and distributions to owners, right? So the change in equity, obviously anything coming through retained earnings, which would be your revenues, expenses, gains, and losses. So let's talk about Regal. So, and when we're looking at these terms and other activities, we today focus on whether they are ongoing or whether they're central or major. You're going to notice that those have been removed from this. So revenues are inflows or other enhancements of assets of an entity, or settlements of its liabilities, or a combination of both, from delivering or producing goods, rendering services, or carrying out other activities. So we no longer are differentiating by whether something is central or major part of the operations. There's a lot of criticism about trying to make that differentiation. They removed that concept in here. Expenses are outflows or other using up of assets of an entity or incurrence of liabilities, or a combination of both, from delivering or producing goods, rendering services, or carrying out other activities. Now they do kind of expand on this concept of what is an other activity, but for today we're just going to introduce these topics. And then how would we differ a gain or a loss? So gains are increases in equity or net assets from transactions or events and circumstances affecting an entity, except those that result from revenue or investments by owners. So this is sort of the default, right? The catch-all. If it's not revenue and it's not an investment by owner, then it's going to be a gain. So instead of looking at it as the not, concept, it's a very interesting definition. Very similarly, losses are decreases in equity or net assets from transactions and other events and circumstances affecting an entity, except those that result from expenses or distributions. So you can see here we've made some pretty serious changes to what we have been talking about for a long time. The definitions that we know and love are definitely getting an upgrade. All right, so that's it for this week's blog. Hopefully that's a good summary to help you understand what they're working on. I would recommend you taking a deeper dive into this area as there are significant changes. I just wanted to focus on the core items there, the top 10 elements, but definitely want to give you a little bit of a flavor of some of those changes that you would expect to see. So thank you for joining me on the Genuine Learning blog, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.